just so that we have to recap on. Okay. So, ladies and gents, let's get fired away. So, first, I want to welcome every single one on this call to the Profitable Traders Call. I'm excited to be sharing some vital information with you that I believe is going to be contributing to your journey, especially in the Forex space. Okay. I'm going to be speaking alongside two of our business partners. As you guys, some of you that might know the individuals, we have the president of Next Rise, who's Mr. Ahmed Mukhtar. And then we also have the ambassador of Arise Academy, which is Clifford Cheqona. Okay, so you guys would have seen the flyer. Those are the two individuals I'm going to be sharing this virtual stage with, and they're going to be sharing their part of the topic that they want to deliver tonight. That's going to help you take your skill set, take your knowledge, equip you a little bit much more further within the Forex space. Okay, now obviously I do understand that there's a lot of new people today on the call as well. Some people obviously tuned in because they wanted to gain some value from today's call. So what I'm going to be doing in my segments is to really just kind of give you an overview of the Forex space, kind of introduce Forex to you as a whole so that you have an idea of what the expectation is as you do decide to get started. One thing I'm excited about that I always tell people, Forex is not complicated. All it takes is just learning from people that already have the knowledge. Okay, it's like driving a car, right? You know, how do I learn to drive a car? I find an instructor, right? If I want to pass a course, who do I need? I need a lecturer. In our entirety of our lives, we usually have people around us that teach us, equip us, allows us to learn things that puts us in a space to grow. And that's the same thing with Forex trading. So before I get ahead of myself, let me actually share my screen. We'll get started now. Okay. And then I'll be inviting the next speaker on who will be sharing their segments of today. Okay. Now, also, as I go through today's segments, or should I say my parts, as I go through my session, I would also, give me a second. I would also like you guys to ask any questions. So feel free as I go through my session just to ask any questions. I will be happy to answer your questions on the spot. So that's completely fine as well. And think of this more of a conversation rather than just a presentation. Okay. I don't want to present to you guys. I actually want you guys to understand it. And the only way you understand it is by asking questions and making sure that, you know, everything that is being said to you today, you actually understand it 100% of it as well, okay? And even if you don't get everything, that's completely fine. You know, you'll be able to recap from today's recording, but most importantly, you would also be able to recap through your notes as well, okay? So let's get started, okay? So ladies and gents, firstly, just want to introduce myself. My name is John Olad. Been in the entrepreneur space for coming up to 10 years now, an entrepreneur, an investor, and most importantly, I've really gained a lot of wealth of knowledge around what we call the Web3 Forex space, and everything to do with the financial markets. This is something I've got to learn over a period of time, okay, being in business. Now, I want to first start off by saying, okay, I didn't actually have a background in Forex. It's something I fell into once I became a part of the academy in itself, okay? I got to learn, I had mentors that taught me. Now, initially, my story doesn't begin maybe like everybody else who has the greatest interest when it comes to Forex. For me, I didn't even have any interest. I didn't want to partake when it comes to Forex trading because my understanding of Forex was I used to see these lines, okay? And I would see a bunch of grown folks sitting in front of a screen, okay? Super excited, big smiles on their face. Everyone's so, so hyped up about it, okay? But I used to think to myself, why are these individuals so excited? And this to me looked like somebody who was probably laying in the hospital and you see those graphs, right? That was my understanding of Forex. So I used to think, why is there a bunch of grown people sitting in front of a screen getting excited about, this, the whole idea of seeing, all these graphs. So I didn't have the perfect understanding when it came to Forex, but I was very glad that somebody actually took the approach of telling me to come on one of their calls. And I remember like it was yesterday that I sat on this call where there was like a group of 30 plus people. And we were just learning from this individual. And what's amazing was while we were learning from this individual, in the space of half an hour, that individual made £600 right in front of us. Now, I don't know about you, but that's enough to grab anyone's attention. My background when I was working in the corporate world is that for me to make £600, that probably took me about a week and a half. Okay. But for someone to do that in half an hour, you bet you have my attention. So that's really how my interest began to grow. I started to learn, attending the webinars and, attending the sessions that was being delivered on a weekly basis. And I remember like it was yesterday, and I'm not saying this happens to everyone, but this is how my journey began. My first ever profit that I remember making, my first ever trade I took was £201. And that for me was enough for me to believe in this. Now, what's actually amazing is that, again, for most people might not know this, that in fact, Forex has actually been around for centuries. In fact, it goes way as back as more than 500 plus years. So I just want to also just highlight that this is nothing new. Okay, essentially a very long time ago, this for people to partake in the Forex exchange market, it was initially designed for wealthy people, right? Back then, you would have needed at least a minimum of a net worth of over 3 million. Okay, but as time proceeded, this became a little bit much more open to what we call retail traders, who are individuals like myself, like you, who would probably get started with the Forex market, who can then come in and start with as little as even £500 to even start trading. Okay, now, first of all, how do we define Forex? Okay, for those that might not be familiar, and I really just want to simplify it before we go really deep into today's session. Okay, just so that at least I give you a bit of background, I give you a bit of, understanding as we now digress into the deeper side of what Forex has to really offer every single individual, why you should actually partake in it, why this can be beneficial, and so on and so forth. Okay, so what is the Forex exchange market? Very simple. The Forex exchange market is a global decentralized or over-the-counter market for trading of currency. In the most simple terms, and a simple way to put it, it is the exchange of one currency against another currency, especially when currencies have supplies and demand. So when people want a demand for, let's say, pounds, dollars, euros, what happens is that when there's a demand and it's being supplied, okay, this affects the market fluctuating, okay? So as you guys might know, that the price of currencies fluctuates every day. Sometimes the value of dollars is high, sometimes the value of dollars is low. Same thing happens with pounds, Japanese yen, Canadian dollars, the list simply goes on, okay? But is the act of exchanging one currency against another currency. Now, just walk with me. I want you guys to understand how powerful this is, okay? And the fact that we all trade currency every day, the fact that we all have money in the bank, the fact that, we partake in doing this, on a time basis, especially during the year. Now, a simple example could be this, right? Think about the last time you traveled out of the country, last time you probably went on a vacation, okay? Your first initial point was, I need to exchange some currency. I have pounds. I know I'm heading over to this country. My intention is I need to have some money to spend. But for that to happen, I need to exchange some money. So let's say, assuming you had £500. Let's just assume you had £500. You took your £500 and you exchanged it, okay, let's say into euros. Now, the exchange bureau has now given you 600 euros, okay? Now, you're excited, you're getting ready for your holiday, but something happens. Now, let's say for whatever reason, you don't make that trip. But now, guess what? You remain in your country, but now you're stuck with 600 euros. But you don't spend euros, you spend pounds. So now something could happen here, right? Where you can then go back and then decide to exchange that currency back into the pounds. But two things can happen. The fluctuation of currency can go up or it can go down, which means it can lose its value or it can increase in value. Okay, have you guys noticed when the last time you tried to exchange, let's say, money, if you remember, the rates you got it for the following time you traveled wasn't the same rate. So sometimes you might exchange your £500, you might get 600 euros. Then you might exchange your £500, but then you might get, let's say, 570 euros. Now, guess what? It's because you're exchanging it at that particular rate because price fluctuates. Now, in the sense of that, let's now say the pounds decides to go back up. Okay, just right before you decided to exchange it back, the value of pounds goes back up. So you exchange your 600 euros back now into, let's say, 530 pounds. Now you're 30 pounds profitable than you were from the initial exchange, which was 500 pounds. I hope this makes sense. Okay, many people are doing this. And ladies and gents, this is not complicated. This is not science. This is things that people are actually taking time to learn, but doing it from their cell phone. I like to say, if you have a cell phone, don't just have it as an expense. Learn exactly how you can make it into an asset, okay? Many people walk around with this device and learn how to make it into an ATM machine, okay? Now, the point given is that, look, on the next page, I want to identify that us as retail traders are not the only ones involved in what we call the foreign exchange market. Ladies and gents, when we talk about the market, there are so many companies, so many institutions that are trading money on a day-to-day basis. In fact, the Forex market alone, okay, it pays on a daily basis every 24 hours just over 7 trillion. Okay, I didn't say million, I didn't say billion, I said 7 trillion every 24 hours. Now let's take a look at some of the companies or some of the institutions that are involved in this space who trades the foreign exchange market. And here's a list, right? Commercial banks, hedge funds, right? We have retail traders who are people like you and I that get involved in Forex, prime brokers, retail brokers. We have people like the foreign exchange fixing, right? You have commercial companies, the governments, central banks. My background is actually banking. I come from a banking industry where we used to actually, allow people to deposit money and withdraw money. But here's the funny thing. If I asked you today, who's the manager that oversees your money? You probably don't know their name. If I ask you who's the owner of the bank, we probably don't know. But we trust the banks. And the reason why you trust the banks is because they have sold you the idea that the best way for you to keep your money is to save your money, but not invest or multiply. How do banks make money? How can you have a free account? How can it be free interest? How can it be a free savings account? But yet banks make money enough for them to actually stand as a company and still keep multiplying money. The reason being is because that every deposit, that every single, customer deposits, that income gets traded. This is how banks make money. This is how institutions make money, okay? If you went to the bank right now, say, excuse me, madam, excuse me, sir, I need 50 grand. We don't keep money in the bank, right? Every money gets taken. The money you see on your display screen on your phone app, let's say even on your online banking, doesn't mean that physically the money's there, okay? So these are stuff that you can learn in your own time to understand, okay, especially stepping out the frame. How is money being multiplied, okay? And Forex exchange market is one of those ways that people are really learning that skill. Now, look, moving on. When we talk about our platform, which is called Arise Academy, what's amazing about Arise Academy is the fact that we have some brilliant educators, okay? We have some of the great minds behind the Forex space. We have people that have experience behind the Forex space. We have people that understand the game. And here's one thing I always tell people, right? Whatever that has had longevity, okay, whatever that stood the test of time, you can trust. It's like a plane, for example. Why do humans go to the airport? Okay, we don't question the pilots. And furthermore, we probably don't even know who's flying the plane. But yet, the reason why we walk onto the plane is because in our minds, we trust that plane has been tested. We trust that at least, okay, the pilots, the people on board have some level of experience. Does that make sense? So when you take a look at the academy that we have, you can then look at the individuals behind the scenes and say, you know what, because they have this longevity, we can see, okay, that their results are consistent. You can have some level of trust with what you're being provided. Let's take a look at some of the individuals. Number one, we have Mr. Cliff Cheqona, okay, who's the ambassador of Arise Academy, one of the most brilliant minds and individuals I've ever met in my life, okay? He's one of the educators that oversees everything. We have Marcus, who's also one of the educators also behind the scenes. We have Ernest, who's also one of the educators. And we have someone else, an individual by the name of Happiness, who's also one of the individuals behind the scenes that are sending trade ideas and giving people access to making money within the Forex space, okay? Now, here's the brilliant thing with our academy is that we have an 80% to 93% win ratio, okay? When you get started, I'm going to speak about how to get started, and I'm going to speak about some of the benefits that comes with it. Even if you're already involved with Arise Academy, how you maximize everything that's been given to you. If I put, let's say, £10,000 on the table, and I said to you, you can grab as much as you want, you best bet you're not just grabbing £10. You bet you're not just grabbing £50. You're going to grab everything because you have access to everything. If I tell you that there's so many access to what comes with Arise Academy, you definitely want to maximize. And of course, you want to make sure that you're getting your money's worth as well. Okay, so ladies and gents, moving on. Now let's look a little bit much more deeper into the practical side of things. Okay, I want to speak about the practicality side of things, how to copy and paste, because I know that this is something that some people till today still find confused, very confusing. Now, the brilliant thing with our platform is that you can look at this in two ways. Number one, you can look at it from a perspective of just copying and pasting trades. And you can look at it from a perspective that I want to hone that skill set. Okay. Now, for me, when I first got started with the academy, all I started with was just copying and pasting, listening to the educators, taking their instructions. And that's simply what I did. But boom, I had a revelation. I said, what if I understood what the educators understood? What if I, attended the sessions where I was actually growing and equipping myself, okay, to actually learn this skill sets which we call Forex, that I can walk anywhere around the world just by me having internet. It doesn't limit me to how I choose to make money. In the last 8 months, I've been to 6 countries. Here's the amazing thing. Every country I was in, I was still able to make income. I was never limited by the amount of income I was able to make, just because Forex is on the go. So you can choose, okay, do I want a copy and paste system where I get to just follow the instructions, or do I equip myself where I can learn directly from the educators, as well as still doing the copy and paste, making money, but also still being in the position to do it by yourself as well? So ladies and gents, let's take a deeper look into this, okay? Now, firstly, I want to start by saying one of the things that you actually receive being a part of Arise Academy is that you have your own Turbo application. Turbo is one of our trading apps where you get sent what we call trade signals, okay? A trade signal is sent to your phone where you can then activate the copy and paste system, okay? Now, take a look at the screen, take a look closely, just to give you an example of what's been sent here. Here's a trade by an individual, one of the educators by the name of Marcus, Jamie, okay? Now, if you look at, he sent 2 currency pairs. He sent a currency pair, which is GBP versus the USD, okay? This is what he sent out. Now, our goal is to then take a look at the trade by seeing what we're meant to copy, which is the take profit. So if you look at underneath, you see what's been highlighted in green. We have TP1, TP2, 3, 4, and number 5. So this is what we're going to be copying onto our application, okay? And then we also have something called stop loss. And I'm going to give you the breakdown to help you understand a little bit much more further. But first, let me just give you the highlight. Let me just give you the perspective of how the application looks like, okay? So my initial response to this is, once that trade's been sent, just like a text message to your phone, I go over to my application, I click on copy, and what I will be taking from this particular trade is what we call TP and stop loss. TP means I'm collecting profit. Stop loss means that I will have something in place that will prevent my accounts losing any additional income, okay? Think of it like a safety net. For example, if I was to jump off my building, how do I guarantee that I can still keep walking as long as we put a safety net? How do I guarantee my accounts, okay, is in a safe zone? Is by making sure that I have what we call a stop loss. No stop loss means that I leave room, okay, for the worst that could happen, okay, in a sense, right? So when we take a look at this, this is what the copy and paste system looks like. This is what the application looks like that you'll be copying onto. This is called MetaTrader 4, okay? And again, we'll give every single person access to this if you're new, or if the person has invited you onto this call. Okay, you can reach back out to them and they'll give you the links, direct links, in order to obviously get the download done, okay? And the brilliant thing also about this is that even if you're new to Forex, or even if you've been doing Forex for quite some time, the amazing thing is that we have what you call live accounts. You have demonstration account, demo accounts, where you can actually take practice on every single trade that's actually been sent out, okay? Now, when I copy and paste my trades, as you guys can see, it says on the screen, stop loss, take profit. I'll be copying into that section. And then above, you see something where you see 0.30. That is something called a lot size. And I'm going to explain that on the next few pages, okay? But I'm, again, giving you perspective so that you know what's to come as I go through the presentation, okay? And this is simply what it would look like, as assuming that I close my trades based on what's been sent, okay? So here's an example of some trades that I copied, made £111 just through that system of what was sent by the educators. Now, ladies and gents, let's go a little bit much more further now into the practical side of things, okay? Now, how does trading ideas actually work, okay? A trade idea will look just like this, like I've shown prior, okay? Let's take an example of euros versus GBP. So the euros versus the Great British Pounds, okay? And that's the two currency pairs that we're trading. Now, if you see where it says typo, okay? It just means type. It means that we're buying. So when it comes to the market, it's either you're buying or it's either you're selling. Now, most people see what we call the trend lines or the candlesticks. That's the name for it. But when people see the trend lines, okay, they don't understand that. So wherever the trend lines, appreciates or depreciates, is actually an opportunity to actually make an income. Okay, so this is where we get the opportunity to actually buy in the market, which means our expectation is that the market is moving towards an uptrend. Or if we're selling, our expectation is that the market's moving towards a sell trend, okay? It's depreciating, okay? Now, where it says take profit TP, you see TP 1, 2, 3, 4, 5. That means that we have 5 profits in this one particular trade. We can walk away with 5 profits through the copy and pasting system that they've sent to us. And then you see SL, which is our stop loss. Now, ladies and gents, let's move on. In this case, we want to buy, okay? We want to buy in the markets, all right? We've identified our price. Price just simply means where we're getting into the market from, okay? So this is where we're getting in from. And then take profits would then be above the price, okay? So all our take profit will be above. So all we're initially saying is that from this price, which is an indication to tell us or tell everyone, this is where we're getting into the market from. As the market begins to move, okay, and it begins to grow, okay, or the market begins to have this uptrend, okay, as it moves from our entry to our take profits, it moves from our entry to our take profit 2, to move from our entry to take profit 3, that is our profit zone. And I'll show you how that works in a second. So let's take a look at this. So this is an example, right? This is our price. This is our take profit 1, our take profit 2, take profit 3, 4, and 5, okay? Now, as you guys can see, we also have our stop loss also on there. Now, let's take an example. As we can see, this is a buy, okay? This is an example of a buy. Now, as we witness the trend line actually, going up, as it touches those particular points, okay? So you can see where the green dots are. That means that it's actually met, okay, our take profits, okay? So that's what our expectation is, that we expect to buy. It's hit the green lines, and it's accommodated for our take profits, okay? So this is an example of what a live market will look like, okay? So when you see those trend lines, the expectations are based on what you've copied and pasted. We've set expectations based on where we expect the market to head towards to. That becomes our profits, okay? Now, assuming, let's say, for example, it decides to go in the opposite direction, that becomes, that's where it touches our stop loss. Now, that stop loss is now in place to now avoid any additional losses from what you've placed in as a trade, okay? Now, moving on, let's take a look at this. Now, when you're taking trades, you will see that you have something called pips. Now, what is pips? Pips just means price and percentage. When this are being sent out to you, see that next to where it says take profits, you see what you called pips. Now, pips is essentially what we're trying to accumulate, which means is the unit of measurements to express the change in value between two currencies. So for example, let's say I have my entry here, I have my take profit. Hopefully you guys can see my hand gestures, okay? So I have my entry, I have my take profit here. The measurements between my entry and my take profit, okay, that is, okay, pips. That is what we're accommodating for, okay? So as the market begins to move, that measurement right there is what we're accumulating, okay? Now, let's say, for example, from our price entry to TP1, that accommodates for 20 pips. Then it goes to our TP2, that's now 40 pips. To our TP3, 60 pips, 80 pips, and then 100 pips. Okay, this is what we're looking at. Okay, now why does it multiply as it goes higher? Because when you enter the trade, you entered all your TPs right from the price. Okay, so if I'm entering all my TPs from the price, guess what happens? From my price to TP1 is 20 pips. But now going to TP2, you can see the measurement, the pips, okay, it grows, is a lot much wider. So that becomes 40 pips, almost double, or essentially double. TP3 becomes 60 pips. TP4 becomes 80 pips, and TP5 becomes 100 pips. Now, let's talk about some calculations in this, okay? How is this all calculated, essentially? Because now I've accumulated those amount of pips. Remember, I spoke on the other pages, talking about having what we call a lot size. Now, when you're taking trades, there's something called a lot size, which means how much you're essentially planning to risk. Every time the market moves, that is being multiplied by what you choose to risk. And that risk factor can be around, let's say, 10 pence. It can be around 20 pence, 30 pence, 50, a pound, and so on and so forth. So take a screenshot, take some notes down, just so you understand how you're going to go ahead in terms of placing lot size. Okay, very, very important, because this will also determine, okay, how safely you're taking trades and how you're managing your risk as well. Okay, so lot size, as an example, 0.01 equals 10 pence, 0.02 equals 20 pence. And I know some of you might be asking, why is it not 0.1 10 pence? Okay, this is the foreign exchange language. When it comes to the foreign exchange markets, this is how it's calculated. 0.01 becomes 10p, 20p, 30p, 40p, and so on and so forth. But when it goes to the margin, okay, of 0.1, you're now looking at a pound, okay? 0.2 is 2 pounds, 0.3 is 3 pounds, and the list goes on. Then 1.0 is then 10 pounds, 10.0 is now 100 pounds, 20.0, and so on and so forth. Now, the reason why I'm sharing with this with you is because this will also teach you how you should be managing the size of your account. So if you have a small account, what type of lot size should I be using, okay? And we're going to speak about this in a short while, okay? The next individual I'll be introducing will be speaking about risk management, exactly how you actually protect your account, exactly how you then also grow your account, and how you compound it, okay? Now, let's take an example of what we initially looked at in the last on the last page, okay? So if you guys remember on this page, give me a second, let me just move forward. So on the page, when we calculated the amount of pips, we can see that just going from the price all the way to TP5, we accumulated 300 pips. Now, if we take that example over here, now, and we now say that we're using the lot size of 10 pence. Let's now say that is the lot size that we're planning to use, 0.01, which is 10p, okay? So I think this, I've written this wrong, but let me keep going. So 0.01, so let's say, assuming I'm using a 10p lot size, okay, that will give me a 30 pound profit, okay? So that's what it would look like if I was using a 10p lot size, all right? Now, also, as much as you can gain from the markets, remember, there's also chances that you can also lose from the market. That is the game. You win, you can lose some. But the amazing thing is that just even showing you guys an example in terms of what we provide, you know, students on a monthly basis, having a win rate of 80% to 93%, that tells you enough that overall in a month, you're definitely walking away with some profits. But let's say, for example, you happen to lose that trade and you were losing 20 pips, for example, also utilizing 10 pence as a lot size, that is a 2 pound loss, okay? But let's also look at, if I was to increase my lot size, what takes place? The same example from 10 people now using a pound, that now 10x is what I initially made from a 10p lot size, okay? So if you look at, I made 10p with the 10p lot size, 30 pounds, with the 1 pound lot size, 300 pounds, okay? So your lot size definitely determines the type of returns that you're to be expected when it comes to making money from the marketplace, okay? So ladies and gents, I hope this makes sense. And what I would like to do is just simply also just highlight that, again, when you're taking trades, it's all about how you decide to also manage your risk when you're taking trades as well. And I'm excited because the next speaker would definitely help you guys understand how you can actually take this blueprint of risk management and apply it to every trade you decide to take moving forward, okay? Now, again, just to kind of highlight some of what our educators have been doing, especially just in the last 30 days or in the last month and a half. Here's what's amazing is that you look at our educators and the amount of work that they actually put behind the scenes, providing trade ideas that allows people to actually definitely walk away with profits is amazing, okay? If you look at happiness, for example, last month she did 88%, which is an amazing win rate. If you look at Mr. Clifford Cheqona, for example, 95%, that's an amazing win rate, okay? And again, even I just want to highlight this. If you look at Marcus, for example, sent out 13 trades, 3 losses. And sometimes a lot of people think, I need to have a lot of trades being sent out. It's not about having a lot of trades, it's about having quality trades. Okay, that's the way you want to understand the Forex game, because I can have one quality trade while somebody takes 10 different trades, just hitting and missing. It's about having some good quality trades that can be sent out to you where you can copy and paste. If you look at happiness, 10 trades, 2 losses, that's 8-1. If you look at Mr. Clifford Cheqona, okay, total trades 11. He decided to win 9 out of 11, which is amazing, 95%. You have Nestor Pippin, 16 trades sent out, 6 losses, still walking away with 10 win trades, okay, which is absolutely amazing, okay? So ladies and gents, let me finalize, okay? Let me summarize, let me bring everything in full circle. How do you even get started with the academy in itself? Well, it's very simple. The starting point is you need a broker, okay? You need a broker. that will be sent out to you, okay, by the person that you're working with. They'll show you exactly how you can actually get a broker. Now, the beautiful thing about having a broker is the fact that they are the middleman that allows you to deposit and also helps you withdraw when it comes to trading trading through your MetaTrader, okay? Now, the second application you need is an MT4. Okay, and MT4 is the MetaTrader I just spoke about, but that's where you get to place the trades on as well. Now, also in addition to that, you can start with a demo accounts, and you also have the ability to have a live accounts. Now, everyone that gets started, we always recommend a demo account so you can get used to it, okay? I know that there's this eagerness that I want to get involved to just make money, but it's very, very important that at least you have some level of knowledge to what it is that you're actually doing, and then take your account live and then start taking live trades, okay? To gain full access is $149 for the entire academy. And I just want to advise people, don't always concentrate on price. I always tell people, you concentrate on price, you miss out on what you can actually gain. It's like going to work. We take lunch breaks, buying food, we take, we have our regular routes that we take to work, but we don't think about the money we spend because our mind is fixated on the money that we're making at the end of the month. So even as an investor, even as somebody who's interested in the foreign exchange market, even if you've traded prior, always think about what could be, what is my intention? What can 149 bring to me? Not just even making income, but the level of knowledge. I like to say that information is currency. And if you know how to use the right information the right way, then of course you can make a lot of money in the process as well. But what does this give you? Advanced trades, education, weekly live trades, personal mentorship with the person you're working with. You get added to the community group chat, and as well as live meetup sessions as well. Okay. So ladies and gents, I'm excited. That is my segment done. Okay. I hope this has been somewhat useful to you guys. Just kind of giving you guys some perspective of the Forex market as a whole. But what I would like to do is actually invite the next speaker on, okay? Now, before I do, let me make sure we do. Okay, perfect. All right, so I would like to invite the next speaker onto the call, and they're going to be going through what we call risk management. Now, I want to advise every single one of you. Now, for me, last week, I've been trading for quite some time. I've had, at least some level of knowledge to know how to get into the market, make money. I've copied and pasted. I attend the webinars, learning directly from, our educators. But there's something I learned even last week that really just helped me take my understanding of the Forex game to the next level, which was understanding my risk management. And I just want to encourage every single one of you, definitely pay attention to the segments. I don't know where everyone's at right now. Don't know if you're in a noisy area. I don't know if you're taking notes, but my advice is really lock in this segments, because this really blew my mind. And once I began to understand, okay, this is what I could do or add as an application to what I'm already doing, I knew straight away that this would definitely take my trading skills to the next level. So I would advise you really pay attention to the segments, really lock in, really do pay attention, and ask as much questions as you want as we also go along. And I'm pretty sure Mr. Ahmed Mukhtar will be excited to answer those questions. So can we just literally drop some fire emojis? Welcome to the virtual stage, none other than the president and co-founder of NextRise, Mr. Ahmed Mukhtar. All right, let's go.
John, thank you so much for the wonderful introduction. Highly appreciated, and good evening, everyone. I hope everyone's doing well and having a wonderful evening, productive day. And I'm really excited to be with you all this evening. And I get to share with you something that I'm very passionate about, and that's risk management. John did a wonderful job, in terms of speaking about the kind of overview of the Forex market, right? He spoke about, how the Forex market started centuries. In fact, I just wanted to echo on that. The Forex market actually started, in the ancient Egyptian times, but the way foreign exchange was conducted at the time was through gold and silver. So someone will give you an ounce of gold, you'll give them silver, etc. And then it kind of converted into swapping things. I'll give you a pencil, you'll give me a paper. You know what I mean? And then from there, of course, it reached all the way to where it is today. So again, John did a wonderful job. Can we just give it back to John and let's just drop some number twos in the chat if you all agree with me that John's done a wonderful job. So just drop some number twos. I think he's done a great job. So look, I want to speak to you all about risk management, because risk management is so, so crucial. And I don't even think people really understand how important, how important risk management is. And I'll tell you why. Number one, if you've blown an account before in trading, so let's say you've started with 500 account or 1,000 account or 1,500 account, and you've lost it all, that's called a blown account. And if you've ever blown your account, you would agree with me that the broker never sends you a condolence email. They will never send you an email saying, hey man, listen, I know it was a bad day for you today, and we're so sorry that you lost all your money. The markets will never send you an email. There's no remorse. The market will literally, if you're doing things wrong, it will suck all your money and you will lose everything. So it's so important that risk management is vital. But there's a few things that we have to understand, when it comes to the foreign exchange markets. Number one, I'd like to emphasize on the obvious, okay, which is very important. Every single day in the financial markets, in the foreign exchange markets, there is 6.6 trillion. And now, experts believe it's reached around 7 trillion in daily volume. Now, let me just give you an example, the potential here, because I don't even think people realize really what the potential that you can accomplish in the financial markets are. Because if one understood, I kid you not, you would really devote a lot of time, effort, and money into learning this skill, because it can really set you financially free. So let me kind of put it into an analogy, because we can all kind of relate with analogies. When I say 6.6 trillion, you might not even understand how much money. It sounds like a lot of money, but you might not understand. So just walk with me, because I want you to kind of understand this in the simplest way possible. Now, when I tell you, hey, someone has £1 million, in fact, let's even go back a step. If I tell you someone has £10,000, we all understand what 10,000 is. Now, if I tell you someone has £100,000, there are 10,000s in 100,000. Okay. So 100,000 seems like a lot of money. Now, if I tell you there is £1 million, that sounds like a lot of money. Why? There are 110,000 pounds in 1 million, and there is 10 100,000s in 1 million. Okay, so 1 million, when I tell you, hey man, this person has £1 million, wow, it sounds like a lot of money. But walk with me here. Okay, now when someone is a billionaire, think about 1 million. When someone is a billionaire, that means they have 1,000 1 millions. Are you with me? All right. That means they have 1,000 1 millions, right? So if you had 1 million, you divide it into 1,000, 1,000, 1,000, and you did that 1,000 times. That is what a billionaire is. A billionaire has 1,000 1 millions. Okay. Now let me just help you understand what a trillion is. Now, when I say a billion, you're taking a look at less than 1% of the world, like 0.0001, right, of the world. Why? There are only like 2,000 or 3,000 billionaires in the entire world, with 8 billion people living on this planet. So let me help you understand a trillion. In 1 trillion, there is 1,000 billions. Okay? There is 1,000 billions in a trillion. Now, every single day in the trading markets, there is around 7 trillion in volume that is there to be made. Can you guys see the gravity of what I'm talking about here? That means there are 7,000 1 billions available to be made in the financial markets. So let me compare it to something. If today I just imagine 1 billion apples in a field, or let's even say 7 trillion. I put 7 trillion apples in a field. Do you know, if you took 100 million apples from that 7 trillion apples in the field, I probably would not even notice that there's even a difference. Do you know what that means? That means if you are making 1 million a day in the financial markets, no one would still even know your name. Now, how much money is that? There are people today in the financial markets making 10,000 a day, and they are counted as, like, I kid you not, the breadcrumbs of the market. There are people today making 100,000 a day in the financial markets, and they're still the breadcrumbs of the market. There are banks and big institutions making tens of millions, if not hundreds of millions daily. And that's what they do with the money that you deposit in your account. You see numbers on the screen, but your money is being traded so the bank can actually make more money. So I just want to just let you know, this is why banks and institutions, they don't like things like cryptocurrency, etc., because if you start investing your money into cryptocurrency, that means you no longer leave the money in the bank. And if the banks have less money from people, that means they have less money to make more money. You know what I mean? So I hope that you know, that makes sense. So I just wanted to kind of touch up on that because you guys can all really understand the gravity of this. But it's very, very important that you also understand something else as well. It's very important that we all risk manage. And I'm going to dive into this and show you this in detail. But one thing you have to understand is that trades come like buses. There's a different bus happening every single time. If you just drive around in London or any other big city that you're from, you're going to see buses everywhere. That's how much opportunities are available in the market every day. Nearly every currency pair today, in fact, every single currency pair today, no matter what currency pairs it is, moves up or down daily, which means there's an opportunity every day. So just want to let you know, that's the mindset that you have to have. So what I'm going to share with you is, I'm going to share with you risk management. And I tell you why I am qualified to share this with you. And I'll tell you why. Number one, you know, I've been involved in the foreign exchange market since 2015 as an investor. So what I used to do, I used to invest quite a bit of money with individuals and they would trade for me. And I would get a return on my investment, etc., etc. And I made a lot of money from it. Then I decided in 2017, I said, hey, listen, I need to kind of learn this skill for myself. So I started learning the basics of Forex and so on and so forth. And then when we started our company in 2020, I already kind of knew the game. So, and the other reason why I'm qualified to speak about this is because I've lost a lot of money in the financial markets. And I decided to master this skill so I never lose money again. And every penny that I've ever lost, I've made back in the financial markets, all because of what? Risk management. So listen, if you are brand new on today's call, this might not make sense, but this is going to be recorded. So one day when you have the aha moment and you can grasp what I'm saying, you can rewatch this. But if you're already involved in the financial markets and you're blowing your accounts or you're losing money and you're revenge trading, what revenge trading means, you lose a trade and then what you do is you increase your lot size on the next trade, right? Or you remove the stop loss because you become emotionally attached to a currency pair. What do I mean? No, I know for a fact GBP USD is going to buy. Let me remove my stop loss. And before you know, your drawdown of 100 pips. Now, if you don't understand what I'm saying, then it's okay. You can always rewatch this later. And once you grasp later, once you understand and you come back to this conversation, it's just going to really just make sense. Okay. Very, very important. So what I'm going to do is I'm going to share my screen with you and I'm going to show you how I risk manage personally on my personal accounts so that I do not lose money. And I'll tell you something. If you blow an account, I swear to you, you really, really should be stressed. And you should really be frustrated. And you should definitely not repeat that mistake again. I'm telling you, don't just see it as, oh, I blow an account, it happened in trading, let me just move on and get another account. No. If you blow an account, you should be ashamed of yourself. And I'll tell you why. The reason why I say after today, if you blow an account, you should be ashamed of yourself. Now, what you don't know, you just don't know. So it's okay what happened in the past. But I want to let you know, you have to start respecting your money. If you don't respect your money, let me tell you something. Your money won't respect you and you end up losing it. So very important. I'm here to prevent you from blowing your account ever again. So what I'm going to do, I'm going to share my screen and I'm going to share some traits some characteristics that I apply personally to my personal trading life, which has allowed me, number one, to be very, very profitable in trading. Number two, that has allowed me to never blow an account again. And number three, to put me in a place where I can really, I mean, look, you know, I'm the president of Nexarize, as most of you are aware, but it really has put me in a position today that if I wanted to do trading full time, I can, right? So it's a great, you know, what we have, you know, John spoke about Arise Academy. We have an absolute incredible platform. And I want to just kind of just write a few things so you kind of understand this. And again, make sure you take screenshots along the way. This recording, again, will be made available. So again, you can always rewind, rewatch it, etc., etc. So this is going to be our risk management playbook, okay? Our risk management playbook, okay? So let's speak about risk management and what is it that I do because remember this, okay? You can have 90% win ratio and still not be profitable in Forex. Very important, I'll repeat. You can have 90% win ratio and still not be profitable in the financial markets. So it's very important that you understand no matter how great the signals we send are, and I'm going to show you the results we've been getting lately, no matter how great they are, it means nothing if you do not have strict management, okay? So I'm going to share a few things with you, and here they are. Number one, I always recommend if you are brand new to our product, start with a demo account. A demo account will allow you to see the potential of what's possible in our academy. It will allow you to see the potential, okay, if you're brand new. And if you are not brand new and you've been trading for a long time, you've blown accounts before, etc., etc., I'm just going to tell you, right? It's all down to how much money you want to make. It's as simple as this. On average, conservatively, and I'm not speaking about people that trade aggressive, because remember, I promise you this, mark my words, write this down. What's the date today? The date is the 24th. 24th, 4th of August, 9:57, Ahmed Mukhtar told me this. If you trade aggressive, I guarantee you'll blow an account. Guarantee. If you trade aggressive, you will blow an account. This is a long-term, this is a long-term race, right? This is a long-term marathon, not a short-term sprint. Because here's one thing I know. If we're racing in a marathon and first mile you start to run like Usain Bolt, I guarantee you, by the time we are 3 miles in, I'm going to overtake you and probably overlap you. So it's not about being the Lamborghini that goes very fast, that runs out of petrol by the time you get to 100 miles. It's about having a Mercedes that goes 400 miles once the Lamborghini is parked up on the side. Very important. If you don't have that kind of thinking, you'll just be gambling. I swear to you. And if you want to gamble, you might as well go play roulette. There's a 50-50 chance you would win. The financial markets with what we're going to teach you and what we're providing you, you have an 80 to 90% chance that it will go in your favor. And that's all you need to really make this a dream come true for you and your family. Very important. Okay. So let's take this a step further. If the goal every single month is to grow an account by 15 to 20%. And honestly, I believe if you are trading more and you're growing more than 10 to 20 to 50 to 30% or whatever it is, it's either you're over trading or it's either you're increasing your lot sizes and you're not risk managing properly. But 10 to 20% is unbelievable ROI, and it's possible with our academy. Now listen, even if you have 5% growth, amazing. Even if you have 2% growth, amazing. You would never have that anyway in the real world. So even if you're having that, is great. But with what we have going on, you can really grow your account by 10 to 20% every single month. So that simply should tell you how much money you want to make. So let me give you an example. I'm going to speak about, in this webinar, I'm going to speak about dollars because lot size is in dollars and it's not in any other currency. So I'm going to speak about dollars. You can always convert it using Google or whatever, if you want to convert it to GBP or euros. Yeah. So I'm going to start, let's say you have $1,500. That means with this, your goal is to make anywhere from $150 to around $300 a month. And again, that's unbelievable results. If you make less than this, don't beat up yourself about it. But even if you make 5%, which is $75, great job, right? And again, if you make $300, unbelievable. It's been a wonderful month, but that should be the goal. If you see someone doubling accounts in a month, they're risking too much, they have no risk management, that doesn't impress me at all. The number one thing I always do whenever I'm looking at any trading account is, how long has this been going on for? And how much did they start with? And how much has the account flipped to? It doesn't impress me when someone starts a $1,000 account and it's 10,000 all of a sudden. That just tells me they're just risking heavily. You know, so the goal is I want to have something long-term. And as my account grows, I either want to withdraw those profits so I can taste, or I can reap the rewards of my, of my work. Or what I want to do is, I want to let my account compound so I can even, increase risk, right? So I can even make more money. And I'm going to show you, how to do that. So that's just simply what it is. 10 to 20% is the goal. Okay. So 10 to 20%, I'm just going to make that a bit bigger, right? And again, it's up to you. If you start with a $1,000 account, again, it'll be simple maths. You'll either make $100 to around $200 a month is what you should be expecting. Okay. So it's completely up to you how much you want to make. I'm going to let you work out that. I'm not going to dwell on it too much. Now, let's go to now the second thing, which is very important. And in this example, I am going to use a $1,500 account as an example, okay? So my training is going to be based on a $1,500 account. This is what I'm going to be using all my examples with. Now, I'll just say something just in case some of you might not understand it, but if you are doing a prop firm challenge, okay? Now, what is prop firm? I'm not going to train on that today, but today there are firms out there that will actually give you capital so you can trade and they share your profits with you. That's what prop firm is. If you are doing a prop firm, you should never risk more than 1% on any single trade. If you do that, it's just stupid. Simple as that, right? But I'm not speaking about prop firms here. I'm speaking about the academy. If you are now trading using our academy, then I would recommend the maximum you should risk is 3%. You should never risk more than that on a trade. Anything above this is greedy, number one. It breaks our risk management playbook, guys, okay? Very important. And it also just makes our, we want to make sure that we last long-term in this game and not short-term. And I'll tell you why. If you risk 3% per trades, then that means you have to lose a total of 33 trades to blow your account, okay? For you to blow an account, right, you need to lose 33 trades. And let me tell you something. If you lose 33 trades, you shouldn't be trading anyway. That's a fact. This is why I say maximum you want to risk no more than 3% per trade. And what you have to do is decide on a number if you want to risk 1% and don't deviate away from that until the end of the month. I trade month to month. At the end of the month, I close my book. And then next month, if I want to change my strategy, increase my lot size, etc., that's a whole different month. So I treat every single month separate. I never increase my lot size per week and fluctuate things per week. I always do it on a monthly basis. Very important. I treat trading like a month-to-month game. End of the month, I decide, all right, how much capital gained? How much do I want to withdraw? How much do I want to compound, etc. How much has my account grown by? Okay, now let me adjust my strategy accordingly and increase lot size, etc. accordingly. I'm going to show you how to do that using our risk management playbook. But you need to lose 33 trades in a row for you to blow an account. Now, can we all agree to lose 33 trades in a row, you should not be trading? This is why anything above this, please do not do. And if you're risking 5%, just remember, 5%, if you are risking 5%, then that means 20 trades, your account is blown. Very important, 3% maximum you want to risk. So how do you work out this 3%? Ahmed, so if I want to now risk 3%, how do I work out? Well, very, very simple, guys. Let's say I'm using 1,500 as an example. If you have a big account, you could just do this example yourself. What you would just simply do, okay, is find out what 3% of 1,500 is. The way to find out, I'm going to show you now, there might be some mathematicians that do this a quicker way, but I'm just going to show you the way I do it. I just do 1,500 divided by 100, and then I times this by 3%, right? Which is very, very simple, okay? So 1,500 divided by 100, which is $15. And if I times that by 3, that is $45. So that means the maximum I want to risk on a 1,500 account per trade is $45. This is the max I want to risk. I will never risk more than that on any trade. So Ahmed, how do I now know exactly what lot size I should trade if I want to only risk $45? This is now the second part. Okay, so firstly, I just want to make sure everyone's understanding this, this conversation. So just do me a favor. If everything I said makes sense so far, just do me a favor. Just drop me a number 3, please. Drop me a number 3 in the chat if everything just makes sense. Okay, wicked. Good. Okay, excellent. So let's now go to the second phase. Okay, and now the second phase of what I'm going to speak about this evening is, okay, so how do I know if I want to risk 45 only? Because remember, the most important thing that you have to decide first is how much money do you want to risk per trade? If you don't know, look, it's like walking to a barber shop or walking into a hair salon and not knowing what hairstyle you want. Imagine just going and saying, hey, cut me how you want. Cut me bold. If you want to take off my hair, put it in braids. If you want to put it in braids, put it in braids. If you want to give me dreads, give me dreads. If you want to shave it all off, shave it all off. If you want to, I don't know, whatever, dye it. Like, it makes no sense. So you have to know how much money you want to risk. And I'm giving you the playbook, 3% maximum per account. Very important, per trade, sorry, right? So let's now take it a step further. So now if I'm risking $45, okay, how do I know what lot size to use? Well, now this is very, very simple, okay? So the way to work this out on a calculator is you simply do 45, okay? Very, very important. Just give me 1 second, ladies and gents. I just have something that just popped up on my screen. Bear with me, sorry. Just give me 1 second. Let me just take this off. Okay, perfect. Yeah, so we're in action. Okay, so perfect. So let me go back to share my screen and let me go back to what I was saying. Okay, so here we go. So let's say I want to risk $45 per trade. Well, how do I know what lot size to use? Very important. Here's what you want to do. In every single trade, the most important thing, I'll repeat, is where the first take profit is and where the stop loss is. What is the amount of pips? What's the amount of pips to stop loss? And what is the amount of pips to the first take profit? That is the most important thing to any single trade. And I'll come to that and I'll explain why. Okay. So the way to actually find out how to risk $45 only is this. You simply find out what is the stop loss amount. Now, on our trading application, on our Turbo app, you don't even have to worry about that because we give you all that information. It simply tells you this is the stop loss, and it says right next to the stop loss, let's say 35 pips or 30 pips or 25 pips. You can always see the stop loss amount there. So how do you find out your lot size? Here's what you have to do. Do $45 divided by the stop loss size. Okay, very important. Now, so let me give you an example. We are risking $45, and let's say our stop loss is 25 pips. Okay, so divided by, let's say, stop loss, and let's say the stop loss amount is 25 pips. This means on your calculator, remember, this will come up. If you do this on your calculator right now, 1.8 will come up. So again, let me go back again. Let me just take it easier. I have a 1,500 account. The maximum I want to risk is 3%, which is $45. And now to find out my lot size, what I need to do is find out the stop loss amount of that trade first, and then divide the stop loss by my $45 that I want to risk. And on calculator, it will come as 1.8. So here's how you work out the stops, the lot size. Here's what you just have to do. Remove this point and just put 0 in front of this, and then add a point after the 0. Let me just go back and do that again. So 1.8 comes up on our calculator. Remove the point and then put 0 in front of the 1 and put a point there. That is how much we need to risk if we want to risk $45. That's the lot size we need to trade. Okay, very important. 0.18 is our total lot size per trade. So I hope everyone understands this. And I'll just use another example. Let's say now I want to risk $45. And then now let's say the stop loss is now, let's say the stop loss is now 40 pips. Okay, let's say now the stop loss is 40 pips. I do the exact same thing, right? I do $45, okay, divided by 40 pips. And then on my calculator, the way this will appear is 1.125. What do? Take off this dot, take off this point, add 0 in front of it, put a dot after the 0, and this is how much lot size you should be using, 0.11, when you're risking 40 pips. So please remember, your lot size varies depending on the stop loss. Why? If stop loss hits, you would never lose more than $45. Very, very important. And there are some currency pairs that are cheaper than others. For example, gold against USD is very expensive. So even on that, the maximum you can lose is $45. You won't lose more than that. Unlike the cheaper currency pairs, like the exotic currency pairs that are cheaper, you won't even lose $45. You might lose, I don't know, $35 because they're cheaper, right, to trade. But that's another conversation. No need to get into that now. But $45 is the maximum you would lose. So I hope this so far makes sense, because I want to take it up, to another level. So let's speak about take profits and stop loss. So Ahmed, if I have 0.18 to trade, okay, so let me just kind of, put, let me just kind of make this, 0.18. So here you have 0.18. So let's say this 0.18. If I now want to trade that, how do I now break it down into my take profits? Well, one thing I always do is I always close around 50% on my TP1. Okay. This is what I always do. I close around 50% on my TP1. This is why TP1 is very important and the stop loss is very crucial for me. If I don't have clear clarity on the take profit one and stop loss, and I'm not liking, the take profit one and the stop loss amounts, then I don't usually enter that trade, right? Because I'm going to speak about risk to reward, why it's so important. So 50% I close on take profit one. Now, again, if I'm using 0.18 as an example, okay, simple. What would take profit one be? It'll be 0.09. I will put on my take profit one. Okay, very, very simple. Then what I would now do, I have 0.09 left. I would now divide this between my take profit 2 and my take profit 3, if there is a take profit 3. And sometimes some people might even have take profit 4s, and I'll also divide that with my take profit 4s as well. So I'll do TP1, 2, 3, and 4. And then usually if someone has 5 take profits, I don't really entertain that. What I would just do is I'll just set my last take. I'll just set my final TP, which is my TP4, which is the maximum I do, is I would put that as the last take profit. Very important. Okay, but usually I tend to go to 3 take profits. I don't usually tend to entertain take profit 4 and 5. What I just simply do is, if let's say TP3 is 100 pips, but let's say the total trade is 200 pips, I'll set my TP3 to 200 pips. So I hope that makes sense. I usually just do 3 take profits. And another thing that I will also mention as well, if I go back a step, which is very important, okay? So I hope so far what I'm saying makes sense. I never open up more than 2 positions. Okay, I always open up 2 positions. And again, this is a preference. You can open up 3 because you're going to risk the certain lot size anyway, so it doesn't really matter. But I just open up 2 positions as my preference. I'll do one that's TP1. I'll do second position at the final take profit, which is, let's say, TP3 or 4 or 5. Okay. And what I'll do is I'll close partial profit along the way. This is how I trade. But again, some of you might say, oh man, I'm working, so I'll open up 3 positions and I'll just divide my lot size. Either way, or 4 positions and divide my lot size. Either way, it would kind of work out the same. If it hits stop loss, you're going to lose the same amount anyway. Very important. Okay. But this is how ladies and gents, how I break down my trades. Now, why is this important? Why is this important? Let's go to the second. Now, let me take it up a notch, okay? Here's the reason why. This means this, okay? Now, if my trade hits stop loss, maximum I will lose is $45. I never ever think about the current trade, ladies and gentlemen. And I want to put myself on full screen here because I want everyone to really understand what I'm saying here, which is very, very crucial. In trading, it's never about the current trade. It's always about the future trades because trades come like buses. And if I'm thinking long term, I'm thinking about that month, 30 trades. How can I trade 30 trades that month? So one trade is not the issue. If I lose 45, no problem, move on to the next one. You probably have 30 more opportunities. Just an example. Some people might take 60 trades, 100 trades in a month. So never ever get emotionally invested with one trade, right? And believe me when I say in trading is like fishes in the sea. There are plenty of opportunities. So just because you don't catch one fish, it doesn't mean there's not more fishes in the sea. Don't get emotionally invested into any currency pair and remove your stop loss and get into that game because you're just opening up a complete different Pandora box. But here's the reason why I came off full screen. And I really, really want you all, to catch this. And this is very, very crucial, okay? The reason why, it's so crucial, risk to reward is the most important thing when trading. So I know the maximum I can lose. I'm always thinking about the next trade, not the current trade. This is the way I operate. I open my trades. I simply set my take profits and stuff. The application that we have, Turbo app, will alert me when TP1 hits, will alert me if stop loss, it will alert me when TP2 hits. I don't even need to spend time. Simple. I just enter my trades in my NT4, I close it, and I'm waiting for the next trade. That's the way my mindset is. If it's stop loss, great. Take profit, then great. But the goal is this. How can I make more than $45 in that current trade? Because if I lose the next trade, I'm at break even. This is the goal. Very important. I'll repeat. If I lose, I'm always thinking about the next trade. How can I make more than 45 in this trade? Because if I lose the next one, I always want to be break even. This is the way your mindset has to be. It's not about what you lose or gain in this trade because this trade's already gone. You've said it, done. It's happening, right? Now think about the next trade. Okay, man, this trade will determine how great the next trade is. Very, very important, okay? And so now let me go back to sharing my screen just so I can explain this. And I'm going to wrap up very shortly so I can hand it over to our final speaker this evening, which I promise you need to hear what he's going to say. So let's say on take profit 1, I'm closing 50%. So let's say my take profit 1, and this is why for me, stop loss and take profit 1 is so crucial. I like to see almost the same amount. If my stop loss is 50 pips, I usually like my take profit 1 to be 50 pips as well. But and I'll say something which is very important, okay? If your stop loss is 100 pips, and let's say, I don't know, or let's say, let's say your stop loss is 70 pips. So your stop loss is 70 pips, but your take profit 1 is 30 pips. If that trade goes against you, you would lose more than you gain. And I'm going to tell you this, long term, you would always lose more if the risk to reward is not good. And I'm going to come to that, which is very important. Why risk to reward is good, right? Why risk to reward is important. So let's say on my take profit 1, let's say now, okay, let's say that, take profit 1 is, let's say 25 pips as well. This means monetarily, okay, this means if I am doing 0.09, which is 90 cents per pip, that means on my take profit 1, I am now going to bank $22.5, $22.50. Now let's speak about take profit 2. Let's say now my take profit 2 is 60 pips, okay? Now let's say on my TP2, what I always do, I have 0.09 left. I would again put 0.03 on my TP2. So I'll write it here 0.03. Okay. So what I would do, very, very important. Okay. So very, very important that no, actually, I wouldn't even do 0.03. I would do around 0.04. Okay. I'll do around 0.04. What I always tend to do is my take profit when I do 50%, I've got 50% left. Out of the 50% left, I would do 50% of that, which is 25%. Okay. No, sorry. So let's say 50% is left. I will do half of that on my TP2. And then the final one, I'll take it as my TP3. The final half, I'll take it as TP3. Okay, very, very important. Or if there's TP3 and there's TP4, I'll divide that into 50 and 50. Okay, so let me just give you an example. So I will do 0.04 at TP2. And let's say TP2 is now 60 pips. If you're doing 0.04, it's 40 cents per pip. If you times this by 60, this means I would now make $24 on this TP. Now, ladies and gents, this means I've already made my $45. So if I lose the next trade, no problem. I'm still okay. But let's say this trade does well, and now it goes to our TP3. Okay, and on my TP3, I now take another, let's say 0.0, let's say I take 0.03. Okay, this is now 30 cents per pip. And let's say now TP3 is, let's say, I'm going to use 80 pips as an example. If it's 80 pips and you are now doing 30 cents, which is 0.03, and you times this by 80, this is now another $24. And finally, my final take profit, let's say the final take profit is, let's say 120 pips. If I now, let's even have 0.02 open, right, which is 20 cents per pip, and this trade now goes to, 120 pips, let's just say, and it hits all TPs, I would now make another $24 here. So ladies and gents, if we now add these up, if you do 24 times 3, which is take profit 2, 3, and the final TP, and then you add $22.50, that is on this one trade alone that hits all TPs, you are now going to be clear with $94.50, which means even if you lose 2 more trades, even if you lose the next 2 trades, you'll still have $4 profit. Does that make sense to everyone? This is why it's so crucial. But now let me speak to you why risk to reward so important. Why is risk to reward so crucial? Listen, I always look for a trade that gives me a risk to reward of around 1 to 4 or 1 to 5. I might entertain 1 to 3, but 1 to 3 is the lowest I will go. What does this mean? Risk to reward simply means if the final take profit you are going for on that trade is 200 pips, okay? And let's say the stop loss is 50 pips, okay? Let me just put this in brackets. If the stop loss is now 50 pips, this simply means that the risk to reward is 1 to 4. Why? For every 1 pip you lose, you have 4 pips to gain. Okay, very important. So if I can gain 4 pips, and if I lose 20% of the 25% of the trade, that means my risk to reward is 1 to 5. Let me give you another example. Let's say if I change this number from 200 to 150, and now the stop loss is 50 pips, this now goes to 1 to 3. Because there are 3 50s in 150. This is just the easy way to work out risk to reward. Why is now risk to reward absolutely crucial, ladies and gentlemen? If you want to be a profitable trader, write this down. Risk to reward is everything in trading. I swear to you, if you are having big stop loss numbers, you would literally win one. You have to win 10 trades to make up for 3 losses. You don't want to be in that position. So make sure your risk to reward is on point. Let me explain this, and it's the final thing I'm touching upon, and then I'm done. But I hope everything thus far that I've said makes sense. And I just want to make sure everyone's still with me. And it's amazing that everyone that joined this call is still on, which is really, really impressive. No one dropping off, which is just incredible, because normally Zooms, people drop off. And it's pretty impressive that everyone's still engaged. But so far, ladies and gents, if this conversation is just making sense, just do me a favor, just drop me a number 4 in the chat just to make sure that this is making sense. I'm just going to turn off my video 1 second. I'm just going to plug in my AC. Bear with me. Yeah. So there we go. We got air conditioning now. Perfect. So this is so far making sense. This is being recorded, by the way. So again, if you don't catch this, please rewatch this again. It's so, because I'm all about protecting your money. For me, protecting someone's capital is more important for me than people that flip accounts, that grow an account by 100% at the end of the month. That doesn't impress me. That's just gambling. And that's not going to get a pat on the back from me anyways, right? So which is very, very important. Now, let's go now to the final thing I'm going to speak about. Why is risk to reward so important? Let's say your stop loss, okay, is 70 pips, okay? Your stop loss is 70 pips. And let's say your final TP is, I don't know, let's even say 100 pips, okay? This means that your risk to reward ratio, ladies and gentlemen, is not even 1 to 2. It's around 1 to 1.5. Does that make sense? So that means that's a very poor risk to reward. I wouldn't even entertain that trade, yet alone jump in. That is really a disaster. That's a disastrous trade right there that you can literally blow money if that trade is consistently being sent. And I'll tell you why. Because here's what happens in trading, and you have to understand this. Why is take profit 1 and stop loss so important for me? How many times do trades hit TP1? And sometimes, a lot of the times, you don't bring your stop loss to entry after TP1, especially if the TP is only 20 pips. You tend to bring your stop loss to entry after TP2, right? But if that trade reverses against you and hits your stop loss, you lose more money. But if you lose the second and third trade, you will always be in deficit more than profit. So let me explain why this is so important. Yeah, so let's use this example here. Let's say my TP1 is 30 pips, okay? And I have a 70 pip stop loss. Let's say I now close 50% on my TP1, right? I have a $1,500 account. Again, same philosophy. I'm risking $45, per trade. What I would now do is 45 divided by 70, okay? So the maximum now my calculator is giving me is 0.64, okay? Which is pretty low, lot size. But let's say my TP1 is like 0.64, okay? In fact, I'm not going to use the $45 example on this because no matter what numbers I use, it will make sense, okay? It will just make sense. Because I just want you to look at the trades that follow because that will make it even make more sense. So let me just use any lot size, it doesn't matter. But let's say I'm going to use a total on this trade of, I'll use a total lot size on this trade of 0.30, right? That's what I'm going to use. So if I'm going to use 0.30 on a bad risk to reward trade, here's what will now happen. I'm going to close half of that on TP1. So that means I'm going to close 0.15 on TP1, okay? So 0.15 on TP1, and let's say my TP1 is 30 pips, okay? 0.15, which is $1.50. If you times this by 30, this means I will make $45 on TP1. Now, let's go by the same concept. Let's say on TP2, we now close even more. Let's say we close half, or even, let's even say we close 60% more of that trade on TP2. So let's say TP2 is now 60 pips, okay? And let's say now on 0.1, I have 0.15 left. So let's say I close again half of that, or let's even say a little bit more than half. Let's say I even close 0.10, okay? Let's even say I close 0.10 because I want you to get the full gist here. That is now $1 per pip. So if it goes to $60, this will now be, 60 pips, that's $60. And let's say my final TP, okay, is I now have 0.05 left. And let's say my final TP is 100 pips, okay? And let's say if I got 0.05, which is the lot size I have left, this will now be 50 cents, right? 50 cents per, pip. And if this goes to 100, this will now be $50, right? So I've made a total of 50 plus 60 plus 45. I've made a total of a wicked $155 on this trade, right? Which is awesome. But ladies and gents, let me explain to you why risk to reward is so important. If this happens every time, then you'll be profitable. But you know as well as I know, trades never go to the final take profit. It probably happens 10% of the time for a trade to clear all TPs. I'll repeat, very important. For a trade to clear all TPs, it will happen 10% of the time. For a trade to now go to TP2, again, that might happen 50% or 60% of the time. Great. But let me tell you what's going to happen at least 30 to 40% of the time, which is quite a lot. A trade might go to TP1 and it might go back to SL.
That is very common. We have to prepare when it comes to risk management in all scenarios and not just one. Very crucial, not just one scenario. You want to prepare for all scenarios to protect your capital and not just one. Let me tell you why risk to reward is so important. Let's say this trade, let's even say, look, I'll give you an example. Let's say after TP1, you're scared, you break even, right? You bring your stop loss to break even. Okay, great. That means on this one trade, you've made $45. Please walk with me on this, okay? On this one trade, you made $45. Let's say now the next trade, okay, because you're risking a total of 0.30. Let's say now the next trade goes straight to stop loss. Okay, and your stop loss is 70 pips. Okay, that means you will lose straight away. You made $45 in one trade. This is why risk to reward is so important. Please walk with me, okay? You made $45. You brought your stop loss to entry. Bam, you're happy. Yes, it hit my break even. Perfect. I'm okay now. Especially this happens if you're bringing break even after TP1 on gold. I'm telling you, this is for you. This will always happen, okay? But let's say you bring your stop loss to entry. You made $45. You're happy. Now, the next trade, you have your lot size of 0.30. And now it goes straight to stop loss. And your stop loss is 70 pips. Do you know how much you will lose, ladies and gents? You will lose $210 on that next trade. Now walk with me. How many trades do you now need to trade to make back that 210? What if the trade after that only goes TP1 again? The trade after that only goes TP2. The trade after that then goes TP3. You will probably need 3 trades to make that back up that one loss. This is why risk to reward is crucial. My objective is that my stop loss and my TP1 have to be almost similar. I'm not saying all cases. Like, let's say if my stop loss is 35 pips or my TP1 is 25 pips, I would entertain that. But if my stop loss is 35 pips, but TP1 is 12 pips, I'm not even going to enter that trade. I won't even entertain it. So what I always do when the educators that we have send a trade, I always look at what their TP1 is. If it's similar by, let's say, 10 pips difference, I'll enter that trade. But if that trade, in my opinion, if it's more than 10 pips, 20 pips, I don't enter. Unless what will happen is if that trade goes TP2, TP3, then great. It's a great trade. And if I miss it, listen, please remember to miss a trade and it goes all TPs, that's not a lost trade. I'll share something with you and please write this down. To not be in a position is a position. To not be in a position is a position. I'm always in a position when I'm not in a position. Why? Because I'm not risking my money. I don't fancy that trade. You know, so very important. That's why TP1 and stop loss is crucial. Now, sometimes some of our educators, they might send a trade, which is 35 pips stop loss. Their TP1 is 14 pips. That happens. If you want to enter it, then that's up to you. But me personally, I don't enter it. Why? I'm thinking about all scenarios when I enter a trade. I'm like, man, if this trade goes TP1, which is 14 pips, then it goes back to my stop loss, which is 35 pips. I lose double more than I gain. This is always what my thinking is, okay? So again, I'm always thinking about TP1. Okay, fine. TP1, I want to close 50%. So at least I make 50% of my stop loss. So even if that trade now, if I cash out 50%, and then now the final 2 positions, which is 50%, now hits my stop loss. If the stop loss and take profit are the same, I'm at break even. Did everyone understand that? Let me just repeat. If my TP1 and stop loss is almost the same, if I hit TP1, cash out 50%, and I've got 50% on the other lot sizes, even if that trade reverses and hits stop loss, I am still at break even. But now if that trade hits 12 pips TP1, 30 pips stop loss, I lose more in that trade than I gain. And I always try to make sure if a trade hits stop loss, I make sure I can always make it up with the next trade. I don't like to play catch up. This is why risk to reward is so, so important. I see some people, their stop loss and their final take profits the same is 1-to-1. That is disastrous. Do you know what that means? For every lost trade, you need to win 3 or 4 trades to be in profit. So you need to have a 95% win ratio. Now look, if you can hit 95% win ratio, then great. Be your guest, knock yourself out. But me personally, I like to say I'm profitable, just so you guys know, even if I win 60 to 70% of the time. Why? Because of risk to reward. So, ladies and gents, I hope this makes sense. The final thing this evening, I just want to show you, right, which is really, really incredible, is this. Why do I love Arise Academy so much? I'll tell you why. Seeing is believing, right? Take a look at my mobile phone screen right now, okay? If you go onto our Turbo app, these are our past results. Take a look at this, okay? Let's just count the last 20 trades together. So let's just count. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Oops. Sugar. Sorry about that. Let me start again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Check this out, guys, right? So the last 20 trades, we hit 1, 2, 3, 4 stop losses in the last 20 trades. That means 16 trades won, 4 lost. And let me tell you something, that is not even the full picture. You know why? These trades which are currently open, these 2 trades are still open. They are not even counting towards our wins. The reality is the last 20 trades, we only lost 2. Because these, once they close and they hit the final TP or they go back to the break-even price, that's when these results will now go into past results. Until that happens, the algorithm of the app doesn't count as past results. So are you with me? 18 trades out of the last 20 we have won. Just today, Bernard sent this AUD USD early in the morning. I jumped into this, in this trade. And in this trade alone, of course, I have large capital, but this trade alone so far, and I'm still in it, has made me more than £5,000 in this one trade alone. Because of course I have big capital. Now, if you have smaller capital, but just imagine that this one trade, if you were $50 up, $100 up, and this is really what you want to do. But how I'm able to trade big capital is because of my risk management. I never ever entertain if risk to rewards 1-to-1. Never. I don't even look at that trade. And sometimes what you see, some people, their stop loss is 100 pips or 80 pips or 70 pips, and their take profit is 100 pips or 110 pips, 100. You will never, I guarantee, unless you win 95% of the trades, you will never ever be profitable. And me, like I said, I like to prepare myself for all scenarios, just like, and I'm sorry to say this, just like the English weather. In my car, I have an umbrella. I have a rain suit, even on a summer's day, because you just never know what's going to happen with English weather. That's the way the financial markets are for me. So risk to reward, so crucial. Like I said, don't risk more than 3%. Prop firm people, only 1%, because you need to lose 10 trades for you to lose your prop firm challenge and then start again. But ladies and gents, the point I'm trying to make is, when was the last time you saw us in Arise Academy lose 33 trades in a row? That never happens. So guess what? You're never going to blow your account as long as you risk manage, and you can really end up being profitable. So look, I'm really excited about everything going on in Arise Academy. We have a great platform, great education. We have a great group of people that are plugged in with us, just making it happen. What I would honestly encourage you all to do, join the movement, join the wave. Very important. Some of you have asked me questions like, well, how many educators shall I follow? If you are starting as a brand new person, start with one educator, right? Look, if you go onto our application, again, when you are making this decision, is very important. Is like when you're moving into a new house, you make a decision as in, does this house match your style of living? Does it have enough bathrooms? Does it have enough bedrooms? Does it have all the amenities that you need? If it doesn't, the house is not adequate for you. You're not going to move to a 1-bedroom house if you have 5 children. You know what I mean? It's got to cater to your needs. Same thing, an educator has to cater to your needs. So let me give you guys an example. What I would do if I were you is spend some time, because this is your money. Go onto our all-time results. All-time results, you can see the number 1 person is Marcus. Go onto Marcus's trades. Take a look at his historical results. So I can see his Euro USD Remember what I said. Take a look at his stop loss, 21 pips, take profit 119 pips. Okay, I like the sound of that. I fancy Marcus. Let's now go to his other trade on gold, right? Stop loss 10 pips, take profit 110 pips. Okay, I can see a pattern where this guy's stop loss and his take profit one are almost the same. Now, stop loss 23 pips, take profit 117 pips, 6 pips away, no problem. If it reverses to my stop loss, I can bear a 6 pips loss, no problem. I'm only going to lose, let's say, $6 at 0.10. Now, let's say if I take a look at his other trade, this one hit OTPs, right? Now, you can see he hit 130 pips on this one, but his take profit one was 20 pips. And his stop loss is shown as 0. I don't know why, but let's just assume his stop loss was 20 pips as well. But Marcus, one thing that he does is that, so I understand why some of the trades are shown as 0. Whenever you bring a stop loss to entry on our app, it comes up as 0. But normally when Marcus sends trades, his TP1 and his stop loss are almost similar. So you can see TP1 is 20 pips, stop loss is 20 pips. If you take a look at another trade, TP1 is 20 pips, stop loss 20 pips. All right, you know what? I've done my research. I fancy this guy, Marcus, man. Listen, this is the guy's trade I'm going to take. What I simply do, I go onto the app, I go onto notifications, I turn off everyone, and I will just keep Marcus open, okay? Now my phone only vibrates when Marcus only sends a trade, okay? That's just an example. Start with one person. Then if you want to go into two, go into two. Then if you want to go into three, go into three. But ladies and gentlemen, this is how you start. Start with one. Then if you can risk manage and so on, you want to do two. Then you want to do three. Then even all the educators, then great. You can do that. But make sure if you're doing that, you're in a place where you can risk manage. Because I know for a fact, the entire Turbo Academy last month, I think we did around 65 to 70% win. I think even more than that, if I'm not mistaken. Let me just have a look at just one thing, and then I'll hand it over to the next speaker, ladies and gents, which I know you're all excited to hear from. But again, look, so if I go to our last month's results, okay, let me just have a look at this results. So if I go to our last month result, perfect. So the last month, ladies and gents, in the month of July, we had an 82% win ratio on our Turbo Academy, 82%. So I know even if I take all the educators trade, I'll still be profitable. I don't encourage you to do it from the beginning, but gradually work your way up. And please remember, if let's say as your account size grows, you have a decision. Let me withdraw my profits and enjoy so I know the money is real, or let me put it back in and compound my account. Now, if my account goes from 1,500 to let's say 2 grand, what I now do is I can adjust my risk management. Now, rather than risking $45, which is 3%, I would now risk $60, which is 3%, and I'll increase like that so I can increase my profits. So, ladies and gents, I hope that made sense. And I swear to you, people do not get this content of education until they're probably minus 10 grand in blowing accounts. But we are giving it to you now. So you have a great trading journey. You are profitable. And please remember, do not risk your money, such as removing stop losses, going against your own rules. That's the only way when the house burns down, when someone makes a mistake. Houses will never burn down if the cookers are turned off, if the lights are switched off, any electrical appliances are unplugged. If you make no mistakes, your house will not burn down. But if you start doing things like mistakes such as removing stop losses, and understand, if you lose 5 trades in a row, no problem. Guys, even if you lose 5 trades in a row, please remember, we're going to be taking 30 trades in a month, or even let's say 20 trades in a month. If you lose 5, no problem. Have the same energy that you had. Why? To blow your account, you need to lose 33 in a row. You still have 28 shots left. This is the way that you want to think. So anyways, with that being said, ladies and gents, I'm going to hand it over to our final speaker. And again, I swear to you, this person just today, I just want to let you know, they made me £1,300 and I am still in the DAX trade right now as we speak. So Cliff, I want to thank you, brother, because you made me £1,300 today on your DAX 40 trade. Last week, and look, and it's okay. Last week, Cliff sent 2 NAS 100 trades. I lost money with that. No problem. But just today, and this week alone, I banked on his Frank 40 trade, and I also banked on his DAX 40 trade. I'm back in, like, I'm even in more profit than I lost last week. So if I lost last week and I'm like, oh, I'm not going to take Cliff's trades anymore, I will never ever make back even more than I lost. Does that make sense? So, ladies and gents, want to let you know this guy is just sniper. Today alone, he hit 123 points on DAX 40 alone. I always take his trades without fail. And even if he hits stop losses, I never get discouraged because stop losses are part of every single game. But the most important thing, last month, Cliff did 95% win ratio, which is just ridiculous. Like, look at this, 95% win ratio. And I kid you not, he never does less than 80%. Since I've known him for the last almost 3 years, always hitting 85, 90, 95. And I swear, if he hits stop losses, listen, I would rather have someone that sends 5 trades, 3 trades a week than someone that sends 3 or 5 trades that makes me lose. Does that make sense? So it's not about the quantity, it's about quality and protecting our capital. So, ladies and gents, he's our education director. I have a lot of respect for this individual. So with that being said, ladies and gents, please help me welcome to the virtual stage, education director of Arise Academy. That's Mr. Clifford Cheqona. Cliff, the floor is yours. Oh yeah, Cliff, I'm
Okay, I can unmute now.
perfect.
I'm black, so people will not know that I'm blushing, but I'm just like, I don't know what to say from that edification, but then thank you so much. I'm just here just enjoying the whole entire education, and I'm like, imagine if in a company your president even understands trading, that you cannot cap. That is just the truth, guys. If you guys can hear me, I know it's super late, but I'm not gonna take much of your time. It's just that this call has been incredible, from John to Mr. Ahmed. And you see, just drop some number ones in the chat if you guys want me to share something a little bit, before we just wrap up, because I'm not gonna take much of the time. I know that it's super late wherever it is, but I just want to just say something. The truth of the matter is, I speak to Mr. Ahmed on a daily to daily basis. We talk a lot, and anytime that we hop on a call together, the only thing he wants to hear is, Cliff, how can we make people money? That is all that he talks about. And I'm just saying this for you guys to understand that sometimes maybe you may not understand to the level of how they genuinely really want people to make money. It's like, that is the only thing. You can say anything you want to say. It ends up in one question. Cliff, will people make money? I'm just saying this for you guys to understand that, there is a genuine care for you guys, your income, your profits, and so on and so forth. And that is why I'm sure he took his time himself from all his busy schedule just to come and, help you guys understand how to be able to manage your portfolio. Now, if you know me, you already know that I love talking about, the psychological side of trading. Because, John started with an incredible, illustrations of how you can copy and paste and so on and so forth. And he, Mr. Ahmed came in with the management side, which is the technical side of managing an account. One thing that I just want to say basically is this, is that, being emotional definitely is normal. You see, whenever we talk about emotions in trading, people are thinking that we are saying that don't get emotional. No, that is not what it is. You will get emotional. I mean, I get emotional. And, I can give you some instances where I've been emotional that if I tell you right now, you will laugh. I tell people all the time that I remember, I've been trading for, a decade in this industry. And one time, the part where I decided to be serious in this industry was one time I took a gold trade that was somewhere around 2014. I took a gold trade, and even when I was in the gold, I knew I over leveraged. I knew that I didn't, use proper risk management. I knew that, but that was not the point. What happened next was, when I was losing the trade, I started praying over the account. I started calling, names like God of Abraham, God of Jacob, Father, I believe, because that money, I wasn't supposed to lose it. I literally started praying over that account so I don't lose the money. Literally, I started praying. And guess what happened to the account? The account blew. Now, you guys are all laughing here. I'm pretty much sure some of you guys literally have prayed over your account. If you have prayed over your account before, just drop something in the chat right now. And, I'm saying this to say that, emotions are normal. Let's say, for example, you are probably, a single mom. You are probably, struggling right now with your family, and you want to hustle. And that money is an amount of money you may not be able to lose. So if you lose a trade, one or two, emotionally, it will skyrocket. There is nothing wrong with being emotional. I'm going to give you guys this few scenario and then we wrap up. And I want you to listen to me carefully now. You see, emotions in trading is like any other thing that needs to come out of you as a human being. Let's say, for example, right now, if you have to be able to go and use, the washroom by, urinating. Let me just use that as an example because that's the only thing that I can use as an example very well. Let's say, for example, you want to be able to urinate and you come to my house and you go like, Cliff, can you show me where the washroom is? But before you asked me, look, this is what you did. You literally stood in front of my living room and you peed around. Or I showed you where the washroom is, but when you went into the washroom, you didn't pee into the toilet. You actually just peed around the place. Now, there is no problem with you feeling like peeing, and there is no problem with me showing you where to go pee. The only problem I have with you is the fact that you peed everywhere. That is the only issue. So the truth of the matter is emotions in trading is normal. You are going to feel it. Why? Because you are a human being. Does that make sense? So when you lose money, you getting angry is normal. If you hit a stop loss, you being a little bit emotional, there is no problem with that. However, listen to this carefully now. Lack of emotional intelligence is the reason why people are always angry. That means the emotions you feel is not a problem. It's how you control it. That means as a human being, you are not meant to pee, in other words, your emotions anywhere. That means there should be a structure that manages your emotions, just like how a little kid who doesn't know how to use the toilet, they put Pampers on this kid. Why? Because there's a system that helps the kid to manage their pee so they don't pee. One of the things people don't realize in Arise Academy is that apart from the beautiful signal that we send, there is a system that is available to help you manage your emotions. Very important. That one, you cannot catch it by it's not e-psychology. You cannot just copy emotions and paste. That is educational related. You need to learn in order for you to control your emotions. So when you look at Arise Academy, we have a system that makes you money while you are learning how to trade. We have a system that teaches you how to be able to control your emotions. We have a system that teaches you so that you can be able to know how to take your own trades. There are little different systems. The only issue will be if you don't know which systems to follow. Now, I'm only here to talk about the psychological side of things and we wrap up. Few minutes, we are done. You see, guys, what Mr. Ahmed shared is one of the most crucial things every single person needs in trading if you want your portfolio to grow. But as I was listening to him, I was sad. I was really sad. Why? Because I was like, oh God, I pray people understand what he's saying. The reason being is because of this. Listen to this now. It is like me telling you, did you know that the way to get the body you want, the right body you want, is to go to the gym? In fact, I give you the right gym course. I give you the food you have to eat. I give you every single thing. The only sad is the majority will not go to the gym. Are you feeling me? The majority will still not go to the gym. So the problem is not lack of knowledge, it's lack of application. Because without risk management, listen to this carefully now, guys. I started to say this because I want you to get this 100%. When it comes to the financial market, then please write this down. If you are ready to write this down, drop some number ones in the chat. Let me tell you this. And if you take this only from me today and you take it to your team, you take this to your trading business, that is fine by me. Listen to this and write this down. When it comes to the trading industry, the big boys, the guys that we call them the big boys, the big guys in the industry, they also get emotional. They get emotional just like you. The only difference between you and them is what I'm about to tell you. When they get emotional, it affects the markets. Listen to this carefully now. Anytime that the big boys get emotional, it affects the markets. That means the market does not just move. It moves based on some factors. And I told you guys some of this on our call today on the advanced session. But when you, the retail trader, when you get emotional, it affects your pockets. Did you catch that? Whenever they get emotional, it affects the markets. But when you get emotional, it affects your pocket. So psychology in trading is not an option. You can never succeed in trading without proper structure of psychology in trading. Never. Take it from me. 10 years in this game, and I can assure you, I had people who came to me and said, Clive is always talking about psychology. 3 years later, they came back and said, Clive, you are right. I didn't want it to be right. That is the truth. Whether you believe in the law of gravity or not, if I jump from this story building, I will go down. You don't need to believe what I'm telling you in order for it to work. Listen to this carefully, because it breaks my heart that there is so many ways to make money in this industry. Guys, I can assure you, even me, I get emotional. But when I get emotional, sometimes there is a system I have in place that makes me come back again and do the same thing over and over again. Listen to this carefully now. Another thing I want you to write down is always plan your trade and trade the plan. Always plan your trades and trade the plan. Very important. You see, there isn't so many things I can do here because I do this psychology course on a weekly basis. So we will leave that to that side. But one thing I want to just tell you is that success is the progressive realization of a wealthy ideal. Guys, you may be here on this call right now, and maybe you came to join this academy and you started trading because you have family bills to settle. Maybe you are trying to help somebody to become, financially free, maybe your family, whatever it is, I don't know. Trading is not complicated, but we as human beings, we can make it be. Human beings are very complicated species that we can turn anything that is meant to be less complicated into a complication. But one thing that I will tell you right now is this, is that while you are on this call, how you receive this information is very important. You don't need to like me for what I'm saying to be true and work in your life. If I take a sodium and chlorine and I combine them together, I will get a salt anywhere I go. You don't need to believe that chemical reaction for me to get a salt anywhere I combine sodium and chlorine. I'm saying this for you to understand that a lot of people are refusing to believe and understand that no matter what it is, there is a body of structure that you need to have in order for your trading to be consistent. Let me ask you a question before I wrap up. How many of you guys on this call doesn't have a problem of seeing blues, but you are asking one question, that how can I turn trading into a career that can set my family free? If that is you, drop something in the chat. If it is not you, it is fine. You don't have to. How many of you on this call is asking yourself this question, that, okay, trading works, I've heard you, but how can I turn trading into a business that can be able to change my life, my families, and my whole entire generation? If this is you, let me know. If this is you, this is the secret I'm telling you now. That you will make blues. That is never going to be the problem. There are going to be some days you will make the blues. But you don't just want to make blues some days. You want to make blues to the point where that becomes your level of sustenance. This is true. So guys, look, for me, a lot of people don't like me in this industry because I stand against so many things. And if you follow me, you will know me. You will either love me or you wouldn't. But guess what? This is the thing that has kept me going. One thing I'm about to tell you is what has kept me going, regardless of how people see me in this industry, is that I don't care. I will always choose the truth before anything else in front of you. I'm going to be honest with you. I will tell you how trading works. It doesn't work the way you want it to work. It wouldn't work. Believe me. I've tried every way and I came back to the one part of way trading works, principles. You either follow it or you don't, and you will regret it for the rest of your life. Whether you choose to quit trading today or not, the financial market is going to be there. This is just the beginning. People are going to now start making millions of dollars. It is coming. You will see. All those who understand what I'm telling you and you give yourself time, it is just a matter of time you will make it in this industry. But if you don't, and you want the things that will make your ear tingle, it's up to you. But hey guys, I really pray and I hope that what you are living today with this call with It's not just, it's what is even saying is true. It's up to you. Believe me. And with that all being said, I just want you guys to know that there are so many amazing things coming up in our Rise Academy. I've opened up some of them to, our amazing, incredible leaders. They know it. They have heard it. They are super pumped. They have seen it. Whether you believe it or not, that is up to you. Let me tell you one more thing before you go. There are so many things out there that looks like it, but are only few. Me and Nesto was talking about something and we were bare laughing. At the end of the day, one of the things we were talking about was this. We're like 90% of retail traders, we say, lose money in 90 days. And me and Nesto were like, where are the 90 traders? Because it seems anytime you go on Instagram, it looks like everybody's successful. So Nesto asked me, Cliff, where are the 90% who are not making money? Because it looks like everybody's successful in trading. This is why Arise Academy does not care about hype. Let me tell you the truth now. That was one thing me and Mr. Ahmed had a conversation. He said, Cliff, I don't care about the hype. I don't care about the trader that flips an account 100% in the night. I don't care. You heard him today. He said, I don't care. We want to make people money. Forget about the hype, Cliff. Are the people in the space are going to make money or not? So this is why Arise Academy, our number one goal has always been the results over hype. And you will see it. You've always seen that it's true. So guys, ladies and gentlemen, listen, I'm saying this just to bring you to the point that you are in one of the most incredible academies you can ever find. Why? Because this is the place where you will find the truth. You will never find any academy in this world. The president himself will come and teach you, will come and teach you management. Never, believe me. I have been in different places and I'm telling you today. So you guys are at the right place at the right time. It is how you see it. It's all about your perception. With that all being said, John, I'm going to pass the call back to you. I don't have anything else I want to say. I think they have that incredible job. So at the end of the day, I'm going to pass it back to John. If you guys are ready to rise with this whole team, drop a rise in the chart. Now, you don't need to drop it if you don't feel it. I only just need the genuine people who want to arise. Now, put a rise in the chart while I pass the call back to Mr. John Olad. Brother, how are you doing? Come back. Let me just see your face because I didn't see you today.
What's happening, bro? How's it going?
Yeah. I didn't when I came when I call you're not on. But hey, bro, look, that smile is a money smile. Bro, we're ready to go. All right, bro. So take it over, man.
Thank you very much, Cliff. Honestly, I don't even think there's much to even follow up from that. Right from Mr. Ahmed's Mukhtar's training, talking about risk management. Like I said, even before I edified him coming on the call, I said, me hearing that for the very first time changed the game for me in terms of how I now look at trading. And even just your words, Cliff, for just closing out today's call. Absolutely amazing, man. So we appreciate you for everything that you do. And again, ladies and gents, this is the level of leadership within our space when it comes to the Forex market. This is what you get. And I'm telling you right now, you haven't even seen an ounce of it. This is just one call you've been on. But imagine we have this type of conversations on a regular basis, Monday to Friday. Imagine having conversations where people can come together, talking about the future, talking about the financial market, talking about how they can take their skill set to the next level. Unbelievable. So I just want to encourage every single person that you know that Arise Academy provides this type of conversation, this type of training every single week. And all you got to do is just plug in, take advantage of it, learn from some of the brightest minds in the game. I've always heard this, and it's something I actually heard from one of my mentors, and he said, when you can't get into a room where they're having this level of conversation, you got to become the waiter, you got to become the sweeper, the cleaner, whatever you got to do, you got to be in the room where they're talking about how you can take things to the next level. And I'm telling you, watch out for the next, quarter, watch out how we close out the year. And we're super excited. Rise Academy on the map. Make sure that you are plugged in. All right. So on that note, ladies and gents, just want to leave you with that. I hope you've enjoyed today's call. If you are on social media, I hope you took some content. Hope you were able to record some stuff. I've also just wanted to drop everyone's handle in the chat. So Mr. Ahmed Mukhtar, feel free to follow him, tag him, show him some love, appreciation for everything you've learned today. And we also have Clifford Cheqona, also's handle in the chat as well. Show some love, tag him, and maybe put something on the content, something that you've learned today. Let's repost that. Let's make some noise. Let's create some attention within the Arise Academy space and make sure that you are locked in with the community that we have as well. But on that note, ladies and gents, have a good remainder of your evening. God bless. Well done. Congratulations for locking in. And I can't wait to see you on the next call. Bye for now. Bye-bye.